Bitcoin is surging to unprecedented heights. In this video, we're discussing the latest BTC price action and what it could mean for the future of cryptocurrency. Will Bitcoin reach $100,000? We're breaking down the charts, analyzing the trends, and exploring the possibilities. If you're a crypto enthusiast or just curious about the world of Bitcoin, this video is for you. Stay tuned for insightful commentary and expert analysis. Join me as I explore the potential for Bitcoin to skyrocket to $100,000 and what that could mean for all of us. With the cryptocurrency market constantly evolving, the idea of Bitcoin reaching such a significant milestone has captured the attention of investors, traders, and even casual observers. As we analyze the factors that could drive Bitcoin's price to new heights, we also need to consider the implications for the global economy, financial systems, and everyday individuals. Could this surge represent a new phase in the adoption of digital currencies? Or will it lead to new challenges in terms of regulation, security, and volatility? Let's dive into the possibilities and explore how such a rise could reshape the future of money. There are several factors that could drive Bitcoin's price to new heights, potentially pushing it toward the $100,000 mark. These factors come from various sectors including market demand, technological advancements, and macroeconomic trends. One of the most significant drivers for Bitcoin's price could be continued institutional adoption. Over the past few years, large financial institutions, hedge funds, and even public companies have started to invest in Bitcoin, seeing it as a store of value and a hedge against inflation. If more institutions begin to allocate substantial portions of their portfolios to Bitcoin, the demand for the cryptocurrency will increase, which could push the price higher. As Bitcoin becomes more widely accepted as a form of payment and as a legitimate asset, its value could rise. Major companies such as Tesla, PayPal, and Square have already shown interest in cryptocurrency, and many others are following suit. Increased adoption by businesses for payments and integration into financial services could help elevate Bitcoin's status in the global economy, thereby increasing its demand. Bitcoin's supply is capped at 21 million coins, which creates a natural scarcity. As more people become interested in owning Bitcoin, the limited supply can lead to higher prices. The concept of Bitcoin halving, where the block reward given to miners is halved every 4 years, reduces the rate at which new Bitcoin enters circulation, further tightening supply. If demand continues to rise while the supply remains fixed, this scarcity effect could push prices to new highs. Bitcoin is often seen as a safe haven asset during times of economic uncertainty. With global inflationary pressures, currency devaluation, and geopolitical instability, Bitcoin's appeal as an alternative to traditional fiat currencies could grow. If traditional financial systems experience instability, more people may turn to Bitcoin as a store of value, potentially driving up its price. Improvements in Bitcoin's underlying technology, such as enhanced scalability, lower transaction fees, and faster processing times, could increase its appeal. For example, the Lightning Network, a second-layer solution designed to facilitate faster and cheaper transactions, could boost Bitcoin's usability for everyday transactions, making it more attractive to users and investors alike. Clearer regulations around Bitcoin and cryptocurrencies can provide more confidence to institutional investors, as well as retail investors, in the market. Positive regulatory frameworks that favor Bitcoin could encourage widespread adoption. On the flip side, overly restrictive regulations or bans could have the opposite effect, potentially hindering its growth. However, many believe that regulatory clarity will ultimately benefit Bitcoin by providing a more stable and predictable environment for its growth. The psychological factor of FOMO plays a big role in the price movement of many assets, including Bitcoin. As Bitcoin's price climbs towards new highs, more retail investors may rush to buy in, fearing they might miss out on significant profits. This influx of new buyers could push prices even higher, creating a self-reinforcing cycle of rising demand and increasing prices. The media has a huge impact on Bitcoin's price. Positive coverage, endorsements from high-profile figures, or excitement around Bitcoin's potential to disrupt traditional finance could drive increased interest. Similarly, news of large price gains often generates a buzz, attracting more retail investors and further pushing up the price. The rise of decentralized finance, DeFi, platforms, which leverage blockchain and cryptocurrency for lending, borrowing, and other financial services, has introduced new use cases for Bitcoin and other cryptocurrencies. As the DeFi ecosystem grows, Bitcoin's role as a foundational asset in the space could strengthen, further driving up its demand and price. If these factors align, Bitcoin's price could indeed skyrocket towards $100,000. However, it's important to note that such a rise will likely be accompanied by volatility. While the potential is there, the cryptocurrency market is known for its wild price swings, and many variables, including regulatory decisions and market sentiment, can influence its path. Regardless, Bitcoin's future seems poised for continued growth, and many believe that the journey toward $100,000 is just one chapter in its evolving story. What do you think about Bitcoin's future? Do you believe it will reach $100,000, or will it face new challenges along the way? Drop your thoughts in the comments below. I'd love to hear your opinion and discuss it with you. This potential surge in Bitcoin's price could indeed represent a new phase in the adoption of digital currencies, but it could also introduce significant challenges in terms of regulation, security, and volatility. Let's examine both sides of the situation. A new phase in digital currency adoption. A surge in Bitcoin's price, particularly towards the $100,000 mark, could signal a shift toward greater mainstream acceptance of digital currencies. If Bitcoin reaches such heights, it may be seen as more than just a speculative investment, and could transition into a widely recognized store of value, similar to gold. This could have several positive implications for the broader adoption of digital currencies. As Bitcoin gains value and stability, it could be more widely accepted for everyday transactions, allowing users to spend it for goods and services. The infrastructure for digital payments could improve, with more businesses accepting Bitcoin or other cryptocurrencies. A price surge would likely attract more institutional investors, such as hedge funds, pension funds, and corporations, who view Bitcoin as a long-term investment asset. This increased institutional involvement could lead to better market liquidity and more sophisticated financial products, such as Bitcoin ETFs and futures, making it easier for both retail and institutional investors to enter the space. Central bank digital currencies, CBDCs. The rise of Bitcoin and other cryptocurrencies could inspire governments to accelerate the development of their own digital currencies. As central banks explore the creation of their own digital currencies, the growing adoption of Bitcoin could push governments to embrace digital assets more fully, shaping the future of global financial systems. However, Bitcoin's continued rise could also present several challenges that need to be addressed before it can reach its full potential. As Bitcoin and other cryptocurrencies gain value and become more integrated into the global economy, governments and regulatory bodies will likely tighten their oversight of the space. There could be a push for more stringent regulations aimed at preventing fraud, money laundering, and other illicit activities that are associated with cryptocurrencies. While regulation could bring legitimacy and stability to the market, overly strict or inconsistent regulations could stifle innovation and prevent some users from participating. Moreover, the lack of clear regulatory frameworks in many countries could lead to uncertainty and inconsistency in how Bitcoin is treated. This could prevent it from being universally adopted as a means of payment or store of value, particularly in jurisdictions where governments are resistant to digital currencies. The growing value of Bitcoin could make it an even more attractive target for hackers and cybercriminals. As we saw with high-profile hacks in the past, if security measures are not sufficiently robust, the risks to users and exchanges could escalate. Furthermore, the risk of private keys being lost or stolen, leading to the permanent loss of Bitcoin, could become more pronounced as the asset's value increases. As Bitcoin becomes a larger part of the global financial ecosystem, the security of wallets, exchanges, and other infrastructure will be crucial. Without sufficient security protocols in place, trust in the cryptocurrency market could be damaged, leading to broader market instability. Despite its growing adoption, Bitcoin remains a highly volatile asset. A surge in price could fuel speculative investment, and this could lead to wild price swings. This volatility is a double-edged sword. While it attracts traders looking for profit, it also deters those seeking stability and reliability in an asset. Large price fluctuations could scare away retail and institutional investors alike, particularly those who are not as risk-tolerant. The volatility also extends to Bitcoin's use as a medium of exchange. Businesses may be hesitant to accept Bitcoin for transactions if its price fluctuates too wildly, as it could create instability in pricing and profitability. This volatility could hinder Bitcoin from becoming a truly mainstream currency for everyday use. While Bitcoin's surge toward $100,000 could mark a new era in digital currency adoption, it will likely be accompanied by new challenges that need to be addressed. Regulation, security, and volatility will remain key factors to monitor in determining how far Bitcoin can go in becoming a stable, widely accepted asset. The next phase in the evolution of Bitcoin and cryptocurrencies will require balancing innovation with safeguards to protect users and markets, ensuring that the benefits of digital currencies outweigh the risks. If you enjoyed this video and want to stay updated on the latest cryptocurrency trends, don't forget to check out my next video where I dive deeper into the future of blockchain technology. Hit the like button, subscribe, and share your thoughts below. I'll see you in the next one.